Good morning everybody, this is Lara from Pure Elliott Wave with your Monday to Friday update for Bitcoin, Ethereum and XRP. There was no Monday update yesterday obviously because it was Christmas Day, and so I had a lovely Christmas day with my family, and I hope that your Christmas was as good as mine. It was fantastic. One question I want to answer today is how long do we think it's going to take for Bitcoin to make new all-time highs? To answer the question, let's look at previous situations that are similar, same, different to today. This first major peak on the monthly chart in 2011 at $31.91, followed by a huge bear market lasting 5 months, and then the start of the bull market. It starts off quite slow. I like to think of these markets in terms of energy, like from a physics point of view, and I think of what's happening here as like it's the boiling of water inside a pot with the lid on, and this is the lid, is the previous high. So you start out slow, and then you start to develop some momentum as water comes to the boil. It comes to the boil and then it overflows and pushes the lid off, and now energy is released, and then it goes up to the next major high. And it took only 9 months after it made the new all-time high to reach the next major peak. But it took quite a lot of time on the boil inside the pot here, and it wasn't toward the end when we started to see some real energy develop as that water comes to the boil. Here's the next example from the high of 2013, followed by a consolidation over 43 months. The bear market, the deepest portion of it was over in just 3 months, and then a long, slow, curved bottom starting to develop some momentum. The water boils, the lid of the pot is pushed off, and we start to see some increasing momentum. And then the next peak in 2017. And here's the next important example, 2017. The bear market lasted 12 months, and then there was a consolidation of a total of 39 months. It wasn't toward the end that we started to really see some increase in range and real energy, just in the last 2 months, just before the boiling water pushed that lid off the pot, and then it exploded up to all-time highs. So here we are in the current situation. We saw quite an increase in range for October 2023. November, though, less range. We've seen that before, though. We don't have to see an increase in range every month. Here, back in 2016, in May and June, we saw increases in range, and then the July and August, we saw pullbacks. September, October, really small range. It wasn't here until December 2016 that again we start to see an increase in range. So that's absolutely okay that November and December 2023 are showing a decline in range. After that nice increase we saw in October, we are still moving up throughout this consolidation. We don't yet know exactly how long it's going to continue for. So far, 38 months and counting. I expect we're probably getting quite close. I would expect April, May, possibly as early as March, but that might be a little bit early. I suspect maybe April, May next year, we're finally going to see new all-time highs. And once that happens, the boiling water is going to push the lid off that pot, and it's just going to explode, an explosive upward movement. That's my expectation. The bigger picture is still a series of higher highs and a series of higher lows. This is the basic definition of an upward trend. This market has a strong upward bias, and until we see a lower low below the previous higher high, which probably actually would be here in March 2020, until we see a new low below March 2020, that pattern remains intact. So the bigger picture for Bitcoin is still an overall upward trend. A quick look at today's technicals for Bitcoin. I'm a little bit concerned about behavior after the breakout from this possible pennant pattern, so I'm going to put a question mark now over this target. I still expect overall we're going to see upward movement. If we do see a test of support at 41,100, I'll expect that area to hold. If it didn't, I would expect final support to hold at 38,500. If we saw a pullback to that area, I don't think that's very likely at this point. I'll be looking for this upper edge of the pennant pattern trend line to potentially continue to provide support. It's doing so today, and it did so for the 24th of December. I'll expect that may continue, and I expect we're going to see movement up and away from support at that line for the short term. The volume profile is still bullish. Here is the day, the session that broke above resistance at the upper edge of the pennant. It had a good strong push from volume, so we should be able to have confidence in that breakout. I'm just a bit concerned that overall price is moving lower with a little bit of an increase in volume, and it hasn't just moved up and away from that trend line. It's just sitting around support at that line. It's taking a bit too much time for real confidence in this upward breakout. However, we also did get a bullish signal from on-balance volume on the day that the pennant broke above resistance, so that's a little bit further evidence for a bullish case for the short term. ADX is still declining. It's still in the neutral area. It hasn't managed to get below 15, but it is heading there now, so that's good to see for Bitcoin. With no clear trend indicated and stochastics and price recently close-ish to resistance, the model of stochastics plus support and resistance would expect a downward swing to support and for stochastics to reach about the 50 mark as it has been recently, and then a downward swing to end before upward movement resumes. So this contradicts the expectation from the bullish signal from on-balance volume and the bullish break above resistance from the pennant pattern. This is my short-term Elliott Wave count for Ethereum. I'm looking possibly at the end of a little second wave correction, but it's relatively brief and shallow, so I will allow for the possibility minute 2 could continue lower as a double zigzag, and I'd label it like this. If it does continue lower as a double zigzag, first zigzag X, second zigzag, I'd expect support about the log function of the 0.382 Fibonacci ratio at 2018.35. So let's have a look at technicals and see, is Ethereum bullish or bearish today? Overall, I'd say more bullish than bearish, possibly a flag pattern with an upward breakout which had pushed from volume and now back testing support at the upper edge of the flag, pretty similar to what Bitcoin's doing with its pennant. The target from a flag is 2678, just a little bit concerned that this backtest of support really is taking its time. It should have moved up and away from here now. I expect it's most likely to continue higher, and next time it reaches resistance about 2,400, it may have the energy to just break through. If it does, look for a quick backtest of support before moving up and away, the target 2678. So overall, this picture looks more bullish than bearish, and I'd expect that my first idea that minute 2 for the Elliott Wave count, that could be over. The upward breakout had pushed from volume, and we have a bullish signal from on-balance volume to support it. ADX for Ethereum still declining, getting quite close to 15. With no clear trend, the model of stochastics plus support and resistance would expect an upward swing for Ethereum to reach resistance and stochastics to reach overbought. If they do that simultaneously, then depending on what ADX says, we may expect the end of the upward swing, but if ADX says there's a trend, we'll expect the trend to continue. My Elliott Wave count for XRP, I am not happy at all with the look of this double zigzag. The second zigzag in the double has barely moved beyond the end of the first, and the purpose of multiple zigzags is to deepen the correction. When the first or second zigzag doesn't move price deep enough to achieve that purpose, they usually end substantially beyond, and the X waves are usually brief and shallow. This one is neither. So this doesn't look like a normal double zigzag. I think this might be a better wave count for XRP at this time, considering a flat correction continuing for minor wave 2. Flat corrections are labelled A, B, C, and they subdivide 3, 3, 5. B could be subdividing as an expanded flat, A is a 3, B is a 3, and it's over 105% the length of A, so it meets the requirement for an expanded flat, and an expanded flat C usually moves reasonably beyond the end of A. Minute B within the flat correction for minor 2, minute B must retrace a minimum 90% the length of minute wave A. I calculate that to be 0.73119, so this wave count requires upward movement to this point or above, and then a 5-wave structure down for C to move below the end of A. So quite specific. B can also move beyond the start of A, so we could see a new high above 0.7473 as in an expanded flat. And the most common type of flat is an expanded flat. So if we do see new highs above 0.7473, and if there is some weakness in technicals, then it could be a B wave, and minor 2 could be continuing lower. So I'll be keeping an eye quite carefully on upward movement. If we do see a new high, I'll be really wanting to see some weakness for this wave count. Otherwise, I'll be labelling minor 2 over here as a really odd looking double zigzag if we see strength in upward movement, because B waves should be weak. There should be something off or wrong about them. We should be seeing some bearish divergence, weakness in volume and or range, lack of momentum. There should be something that doesn't look right, something to indicate a B wave. Quick look at technicals for XRP. There could be this descending triangle unfolding. Not too confident with the resistance line. We may need to redraw it in coming days or weeks. It's only got 2 tests. It really should have more for a good looking triangle. So I do have a question mark about this structure. Descending triangles most commonly break out downward, but I think support at 58 cents for XRP is now very, very strong. It's probably going to hold. And if that broke, there's even stronger support below at 55 cents, slightly above actually. I don't expect we're going to see lows below 55 cents for XRP. So that means the target from the triangle is way too low. I think also volume favours an upward breakout is more likely. And for the short term, the volume profile is bullish, a more strong push on upward sessions than downward. We have to go back to the 9th of December to see a strong push for downward movement, and then price fell of its own weight. We also have a couple of bullish signals from XRP on balance volume. This first bullish signal, it broke above this little resistance line, but then it only had 2 tests, so that signal was really weak. But recently, 24th of December, we've had a test of support and it's moved up and away, so this line now has a little bit more technical significance. So there's 2 recent bullish signals, not particularly strong, but the second signal slightly stronger than the first. ADX for XRP is slightly increasing, but it's below 15. It's below both the DX lines. This has now set itself up for a really strong signal in coming days. If ADX can rise up and reach 15 and above, it's going to tell us there's a new trend. I make the comment often that when you're looking for divergence between price and indicators of strength like RSI and money flow, you should wait for pivots to develop before you try and identify divergence to screen out potentially false signals. This is what I mean by pivots. Someone's asked the question, so I'll use the Bitcoin as an example to try and answer. Here we have a pivot from price. Price has moved higher with green candlesticks, and then we've got 2 red daily candlesticks. So we've formed a little pivot here on price. We've formed a little peak here on RSI. We have another little pivot here. This has been followed by 1 downward session. I prefer to look for 2 at least, so I haven't actually counted that one for this reason. And then we have another pivot here. We have a high in price, and it's followed by 1, 2, 3 downward sessions. So a nice pivot on price, a corresponding peak on RSI. So now we can look at this peak or this pivot and compare it to this pivot here on the 10th of November. And we can identify prices made a higher high on a closing basis. Look at the close for price, not the high, the close. And we can identify the concurrent point on RSI. Price is higher, RSI is lower. So there's some bearish divergence. RSI is telling us that although price is moving higher, there's not as much strength in the market at this peak as there was compared to this peak. Because remember, RSI is comparing strength in this market compared to recent price history over 14 periods. We have another pivot here, although it's pretty small. It's just 1 session, and another one here, but again, just 1 session. The next decent pivot we have here is followed by 2 downward sessions. So I'll count this pivot here on the 5th of December. RSI also forms a peak, so now we can look at the close for price on the 5th of December, and we can compare it back to the close of price on the 10th of November and identify a second bearish divergence. We can do it again a few days later. Price closed to a higher high, and then is followed by some downward movement, another peak, another peak. Now we can identify the divergence. So that's what I mean by look for pivots in price and corresponding peaks in RSI. Wait for the pivot to develop. I like to wait for at least 2 downward sessions in an upward trend to form a decent pivot, not just 1, and then look for your divergence to screen out those false signals. That's it today from me with your quick update for these markets, and I hope everyone's having a lovely day.